Hi everyone, welcome to Kromida's Tax Tip. My name is James Kromida, CPA CA. Today's topic is the benefits of incorporation. Very quickly, the main advantage is overall lower taxes. Overall, between personal and corporation. It is a very significant advantage if properly used. So if the taxpayer has net income greater than $30,000 individually, it's time to start looking at the potential of incorporation. Number two, I tell clients, which would you prefer? $35,000 or more dividend income with no other income, tax-free, or would you just want in the form of a dividend, or would you want $11,000 or $12,000 of regular income, salary or interest, out of regular income with non-incorporation through a registered company or them earned personally. The advantage of a dividend through a corporation is a great one, but it needs tax planning. So please check with us to see whether or not this is truly advantageous to you. But on the face of it, it is definitely an advantage. The next advantage is income splitting. You can income split with other family members, be it your spouse, be it children, and it also gives a great opportunity for financing of a succession plan in the future. That also is a very interesting potential tax plan. Number four, financing and government assistance. Through incorporation, there are definite advantages here. For bank financing, it is much preferred. Government financing, it is a requirement. So to that extent, if you're looking to expand your business, renovate, or go into new business, incorporation is definitely an option. The next one is capital gains. If you sell a corporation, then you could be qualified to the capital gain exemption for the disposition of small business shares, and that is up to, right now it's been up from $750,000 to $800,000 per shareholder. So that is a definite advantage. The next one is very simple. It's limited liability. If the incorporation is there, then that limits the liability of the people involved, the management, to their actual signed obligations. It is not a personal liability, except of course for deductions at source and GST, QST, HST. Those, the shareholders, particularly the directors, are responsible even in a limited corporation situation. But certainly it limits the liability of the people involved. That is a definite. That's why the company is called limited. It limits liability. The next is creditor proofing the assets of the shareholders. That's another effective means of creditor proofing houses, investments, properties that the shareholders might have. And the use of an incorporation is a very effective tool in protecting assets of the individuals involved. The last one is very simple. Which jurisdiction should we fall under? Federal, Quebec, or other province? It usually depends, but it's much more effective, I found, and easier to deal with on a federal basis. But if you're going to deal just in the province of jurisdiction, then possibly the incorporation in Quebec or another province would be preferred. The federal charter is more expensive, but it depends on the situation. But generally speaking, the federal charter is a little bit more effective in use. That's all we have for you today. We hope that this has been of interest to you. So if you have any questions, please feel free to call us. Thank you for your attention, and we'll see you again very soon.